Lima Media's Resources Watch highlights some major events that took place during the year. Diversified miner Anglo American's new CEO Mark Kutafani indicated earlier this year that his initial focus would be to find ways to improve value creation within the company.
Understanding how the business comes together, what it needs to do, how it needs to create value is the starting proposition we have. In being systematic in the way we peel the layers of the onion back, I look to start with the value proposition for being a major diversified. We look at the portfolio, the commodities we're in, do they make sense? Are they the right commodities for the future? The assets, are they competitive? Are they as good as they could be? Should we be doing things differently to realise value? Balance sheet, do we have the capacity to realise that value, and are we flexible enough in the way we're operating? We then go to systems and structures, and people know that I think as a mining industry we're miles behind other sectors, so lots of room for innovation. And then finally, have we got the right people in the right roles doing the right work?
The newly listed proudly South African Sibanye Gold, unbundled out of Goldfields, doesn't have to go deeper to grow the business, says CEO Neil Froneman.
Sibanye is not focused on going deeper until there's very clear progress in terms of technology. We do not have to go deeper to grow our business or sustain it. I've reviewed the safety performance of the assets that now sit in Sibanye. Certainly since I ran one of them in 2002, there's been huge improvements in safety. There's been appropriate application of technology.
Goldfields, which was once South Africa's second largest gold producer, says that it has improved its sovereign risk profile by cutting its South Africa production, which is the smallest of its 4 global regions, and dramatically increased its Australian production base to its biggest by far.
We've acquired Barrick's Yilgarn South assets in Western Australia. Let's give you some of the background to the deal and the rationale for that. So we've bought 3 mines in Western Australia that are in the same area as Agnew and St Ives, Granny Smith, Darlot and Lawlers. The purchase price is $300 million. What does this do for Goldfields? Australia makes up 42% of our total production. We would now be a 1 million ounce producer in Australia. We would be the 3rd largest gold producer in Australia after that. I think it helps to diversify the geographical and political risk.
State-owned freight logistics group Transnet made only marginal adjustments to its R307.5 billion market demand strategy, despite South Africa's slower-than-expected economic recovery, a modest growth outlook and softening volumes. It also extended the rolling 7-year investment plan by a further year to 2020.
We are going to continue with counter-cyclical capacity creation. The market demand strategy is no longer 300 billion. It is now 307.5 billion over 7 years. What we have done is that because there are 6 years remaining and we have spent 27 billion in the first year, we have added another year and we are spending more than 27 billion in the last year. So another 30 odd billion in the last year. So we have a 7-year program. So there were questions that were asked, by how much will you adjust the market demand strategy depending on the performance of the economy and so on. And so this is the impact on the original announcement.
JSE-listed Wesizwe Platinum's new COO Paul Smith said that he had confidence in the viability of the company's flagship Bakubung Platinum project in the Northwest Province, despite the volatile nature of South Africa's platinum sector.
We really are focused on the medium term and not necessarily on the short-term issues that challenge the industry. But in terms of the economic fundamentals of the project, they, in our opinion, still remain very robust. In terms of metal prices, and the assumptions we've made on metal prices, I think, are still valid. And supporting that is the fact that this industry is going into an undersupply in terms of platinum, and we see that remaining as such certainly in the medium term. So if you put this all into context, this project is still absolutely viable.
African Rainbow Minerals Executive Chairperson Patrice Motsepe says that South Africa will benefit greatly if it succeeds in instilling new confidence in the global investment community.
It's those emerging markets that distinguishes themselves, that gives greater certainty, greater confidence to investors, and provide a greater amount of global competitiveness that will do well. If you look at the countries that have best created jobs, that have best uplifted the standards of living of their people, that have best improved the living conditions, standards of living, greater literacy, health facilities, it's those countries that provide a huge degree of confidence to global investors.
AIM, ASX and JSE listed Coal Junior Coal of Africa Limited is going all out to dispose of its non-core thermal coal mines in Mpumalanga, which are diverting attention away from the company's higher value coking coal projects.
In the next 6 months, we've said that we want to finally either sell or create the appropriate partnerships or in our total restructuring of our non-core assets, and that's the 2 thermal coal assets. Unfortunately, ever since the thermal coal prices declined, those 2 assets were immediately in trouble. Now we were at an advanced stage with a number of interested parties, and we really are targeting the next 3 to 6 months to come to fruition, to come to closure on both those operations.
South Africa's third largest gold producer, Harmony Gold, said in January this year its Kusasalethu gold mine would remain closed until it was able to operate safely and profitably. The company had delayed the post-festive season reopening of the Carltonville-based mine to review its financial and operational status after a series of strikes at the operation.
We've drawn a line in the sand. We can't continue operating and producing gold the way we're doing it at the moment. From a health and safety risk, from a financial risk, from all those sort of things, we just can't do it. This labour issue has caused a major breakdown in labour relations. Secure and safe production is just not possible. We have a legal and moral obligation to follow and look at security, safety and health of employees, and we need to follow the Mines Health and Safety Act.
JSE listed Wesizwe Platinum continues to advance the development of its flagship Bakubung mine in the Northwest Province, with the headgear construction some 3/4 complete and the primary shaft at a depth of 120 metres at the end of the pre-sink stage. Natalie Grieve reports.
The Bakubung Platinum Mine is expected to have a lifespan of some 35 years and will produce 350,000 ounces a year of platinum group metals. These will be accessed by a twin independent vertical shaft system comprising a main shaft for miners and materials, envisaged to reach 1,000 meters below ground, and an additional ventilation shaft. Bakubung project executive Jacob Motomogolo told Mining Weekly that the headgear construction would be completed by the end of May, after which the main shaft would enter the slow sink phase.
The construction and installation of the headgears on this project started in January this year. We finished pre-sink on the vent shaft in December 2012. The first week of January we did the first lift of the headgear, the smaller one at the back, ventilation shaft headgear. It took us 3 weeks to finish the construction of the thing, because what we do with this thing, we assemble them on the ground and we just lift them up and stick them up there like your Legos, as Tony was saying. The main shaft, we started the lift 2 weeks ago, beginning of April. We're aiming to finish the whole headgear structure and commissioning of it in end of May. We're going to go into slow sink the first week of June. The shaft's depths are at the moment 120 meters on the vent shaft and 120 meters on the main shaft. As I said, we have started now with the slow sink on the ventilation shaft. We finished the final commissioning exercises on the winders, where you're ironing out snag list, niggling issues around the winding plant.
Once completed, the Bakabung complex will include a processing plant located adjacent to the mine shafts to treat and produce a concentrate, as well as 4 underground crushers.
This mine is community-based. The nearest residential structures are 800 meters to a kilometer away from the shafts. The ore body is such that if you want to put the shafts in the center of the ore body, we'll have to remove some of the houses and put these shafts in the housing area then. Now, crushing is one of the big equipments in terms of mills that are going to be installed there to crush on a 24/7 basis. In winter periods, when the cold air drives sound even further, it's going to be pain to the communities around in terms of the crushing, the continuous click sound of crushing. We therefore looked at other areas of interventions, of innovations, and we decided to take the crushers underground as is. The design is such that we're going to have 4 crushers on the main shafts at the bottom, shaft bottom level, so at the crushing level. But we are, however, doing optimization exercises as we speak now. We're looking at other areas of possibly a trade-off. If we bring those crushers back to surface, what is it that we're going to use to make sure that the sound is minimized?
Gold major AngloGold Ashanti is to remove $500 million of operating costs, seek to dispose of Navachav mine before year end, and dress up another mine for a possible further asset sale this year.
What is really changing going forward is, if you notice, we did not give you a long-term production forecast. We are not fixated on growing the top line. The focus is basically growing the bottom line. We've got 500,000 profitable ounces coming in as we go to 2014. And we will not hesitate to use that to remove 500,000 ounces from the portfolio if we have to.
That's a roundup of some of the headline makers for 2013. Stay logged on to miningweekly.com to see which industries will steal the show in the coming year.